Alright, welcome back to Stock Alpha. So tons of earnings are coming out this week, and during earnings season, there's usually a lot of good buying opportunities and a lot of cashing in opportunities. The timestamps for each stock will be in the description below, and today we'll take a look at 5 stocks and give out our predictions for how those stocks will perform throughout November. Also, before we start, let's just take a look at the stock we purchased a day ago, which is Hexo. Invested $6,000, now it's up $700. For those that listened and bought, you can cash out if you want, but for now I just see more potential for uptrend, so I'm going to hold it on for a bit longer. But just a reminder, don't buy stock or sell stocks just because you heard it from me. Always do your own due diligence first. First up, General Electric, huge earnings beat. The stock is up 10% right now, but is it a good opportunity for those to sell out and cash in, or a good opportunity to buy? And looking at the 10-year chart, the stock is at a level last seen during the financial crisis. So yeah, the media and analysts have been beating up the stock for quite a while now, and now I think it's more of a consolidation phase. So yeah, going back to 2016, the stock began to have trouble. Retail investors are still hopeful because they're in a state of euphoria. You see how the trading volume is very low despite the stock being on record highs, and that's because most of the big money are offloading slowly while they're tempting the retail investor to buy the shit they don't want, because for a transaction to occur there has to be a seller and a buyer. And a lot of the retail investors will actually fall into the trap and think that, oh, what could possibly go wrong? The stock has been on a good run for several years now. And then boom, initially the dump was slow because people are still in denial, and then the stock dwindled at a level below support that was last seen back in 2010 and 2011, and then another fall through, finally stopping at a level that was last seen in 2009. But as you see here, the volumes are clearly picking up. And what does that mean? And volume picking up is usually a sign that a stock is approaching its peak or its bottom. And it depends, right? Like if it's a retail investors that are piling in due to hype and institutional investors are selling out, that means the stock is nearing its top and it's going to soon drop because the big money will have a million ways to make the stock go down. And if it's a big money buying and retail selling, that means the stock is approaching its bottom. So here you got to take a step back and see who the fuck is buying and who the fuck is selling. And the assumption is most big money are smarter than most retail investors, right? We can agree that. So personally, I don't think it's a big money selling. No. Most of them probably aren't dumb enough to hold through the whole drop because they probably have information ahead of time. And yeah, I would think it's a good time to load up now. I'm predicting that there's a higher likelihood for an uptrend, but I wouldn't start my position because I don't like investing in mature companies with little growth unless it pays a good dividend. And I would suggest that those are interested to wait for a pullback first. But as for general direction, it should be going up. So yeah, for here, we'll put up. And yeah, so basically from now on, we'll be keeping track of the predictions we made, and then we'll come back in a month to see my accuracy on those predictions. Second up, Mastercard. So again, looking at the trade volume, doesn't seem to be really strong here. And looking at the big picture, what stage do you guys think that this stock is at? So yeah, overall, I would suggest not touching this stock. And third up, Shopify. I also wouldn't suggest touching this stock. I heard this funny saying, if a taxi driver starts to tell you about a stock, that means the stock is reaching or already at its top and will begin falling soon. So yeah, if you start to see all kinds of YouTube videos of people teaching you how to drop ship with Shopify and selling courses on those, that means their time is kind of up. I see Shopify customers facing a few really tough challenges that could drive them away from continuing to sell with Shopify. First of all, AliExpress prices are going up. Like the Chinese manufacturers are aware of this dropshipping phenomenon too. So of course they will raise their prices due to the growing demand because why not? Free money. The dropshippers are still going to buy anyways. Secondly, the competition at Amazon are getting fierce. Like I knew a few really successful dropshippers that got in during the early stages, and after they made tons of money and got a loyal and growing customer base, they start reinvesting the money they earned into getting their own inventory because that's one of the fastest ways to lower your costs and increase your margin. And then they will go with Amazon Fulfillment Center and let Amazon take care of all the shipping and labeling, and also allow them to ship out their products to their customers within 2 to 3 days, which is a big selling point. So yeah, now you have the people that have already achieved success with Shopify taking their business to the next level, like going on to Amazon or whatever, to shorten their shipping period to 2 to 3 days. On the other hand, you have newbies that just watch those YouTubers drop ship tutorials and bought courses and that are just starting off with lower margin due to the AliExpress hiked prices and also extremely long shipping period, like 1 to 2 months. They will just not be able to compete with those that are experienced and have their own inventory that will be able to ship out within 2 to 3 days, right? And also there are a lot of cheaper alternatives than Shopify itself. So the smarter people would just like set up a website themselves with WordPress and use WooCommerce, which is free until you saw success and want to scale up. So yeah, like the future isn't looking too bright for Shopify for many aspects, especially when it has exploded over the years. I feel like it will come back down to reality soon. And then moving on to the next one, Royal Caribbean. Personally, I love traveling on their cruise ships, and I think the well-established company could be my next dividend play. Because it's a well-established tourism empire that pays out 3% dividend. But right now the chart is signaling some trouble, with more and more lower highs coming in, and the volume is also quite low. So I will wait for a better entry point like $94 or $95 to catch a bounce. And if the momentum couldn't carry the stock to a new high, I will look to average down again at around $65. So yeah, we'll put down these three. And lastly, Beyond Meat. People might be wondering, is a shareholder unlock such a big deal that would overshadow the double beat quarter that the company just put out and then sink the stock 20%? Yes, it would if 75% of the shares are getting unlocked. And for a deep dive, you can actually go to Financial Education 2's channel. Jeremy did a very in-depth review of the stock. And so yeah, 75% of the Beyond Meat's outstanding shares become unlocked, right? And it's just simple supply demand from high school economics. Excuse my ugly drawing, but yeah, you see like 75% of shares unlocked means a lot more supply, so the line shifts to the right. And then you also get a shifting demand because of the double beat quarter they just put out, as well as all the good news surrounding stock, like partnering up with food chain giants like McDonald's and Dunkin's. But yeah, like the simplified math is that if it's nowhere near a 300% increase in demand, it wouldn't be able to balance out the 75% share that were being unlocked. Under the assumption that we were previously trading with just 25% of the outstanding shares. So yeah, the result is as the graph moves to a new equilibrium point, the trade volume would increase. However, the price will also decrease a lot, which is basically what we saw on the 29th of October. But is a stock a buy? I still think it's a bit overvalued, but I'm definitely keeping it on my radar now. Because it's a company that's really accomplishing a shit ton of stuff, and the sales will probably grow exponentially if it could ink international supply deal with McDonald's. But yeah, for now, I think the downward momentum will prevail, and I'm looking to possibly start a position at maybe low 60s and then average down as it goes. So yeah, that's basically it for all the stocks I want to talk about. And let me put that down as down. And yeah, from now on, we can track how my predictions are doing. And if you like our video, stick around, and we'll talk to you soon. 여기 있어 아님 혹시 다른 사람과 다른 사랑 아니 보고 싶어 My baby